All right. Good afternoon, everybody. Should be live on the VTF and live in YouTube. I'm still nervous that YouTube's not working properly, so if someone could check on that, I would appreciate it. But otherwise, I'm just going to assume that it is. I'm going to push on. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. Thank you. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Thanks, guys. I appreciate it. Position disclosure is basically the same as it was yesterday. All right. Let's go to the videotape. It's backwards. How did my charts get all messed up? How did they get all messed up? There we go. Boom. Boom. And boom. Good enough. Good enough. All right. So what's going on after hours here? OKLO is getting hit on a secondary offering. It probably should be down even more than it is, to be honest. See where the dust settles on that tomorrow. I kind of like it as a short off that news that hit with the secondary. We've got GameStop announcing private offering of convertible notes. Stock is getting smoked on that. I wonder if it's to buy Bitcoin. We have Oracle reporting earnings after hours. Oracle is up, so that helps. That helps the bulls a little bit because they certainly need more help. All right, so we closed red. We closed red. Holy cow! Down a 0.25% here with the spies. Big 0.25%. Q's off 0.34. IWM off 0.4. TLT was up a little bit. Dollar was down, gold was up, Bitcoin was down. All right. So remarkable that we finished red today. Doesn't mean anything. We're down a 0.25%, a big old 0.25%. The market isn't even down to the ADMA on the daily chart yet. It's still fully within its uptrend, this upward grind, upward channel that it's been in. All appears to be good here technically. But the interesting part about it is that we closed red when we, in theory, should have been up 2+% today. We had the CPI number coming in today. The CPI is obviously an inflation report. The expected number on the CPI was 0.3% for core month over month. That's the most important number that was in there. Now, the whispered numbers were coming in a little bit lower than that. Like the Goldman Sachs estimate was 0.25%. JP Morgan said that they expected the number to come in soft. So, to some degree, this market could have been working its way higher in the upside grind these last couple of days on expectation that the CPI was going to come in a little bit light. And a lot of the big banks thought that the CPI was going to be light based on the fact that the non-farm payrolls number was what it was. So that maybe got placed in a little bit over the course of the last few days. But the core month-over-month CPI came in at 0.1%. So significantly better than the 0.3% that was expected, and better than any of the whisper numbers that I had seen. So the market really should have traded up on that. There was a JP Morgan note that was out that maybe is like a day or so old that it gives like what the probability is of different outcomes. I posted it really early in the morning in the VTF. You guys can scroll up and see it for yourself. It gives you what the possibilities are for these different outcomes, and then tells you what they expect the market will move on that. And basically, if my memory serves me correctly, the core number that we got, they put a 5% probability on it, and that they said that the market would be up 2 to 2.5%. Yeah, Tate just posted it right there for us. That the market would be up 2 to 2.5%. Now, I actually thought that was too much. I kind of disagreed with that note. I thought that even on a number as cool as we got, that we wouldn't be up by that much. But I certainly thought that we would be up. And in theory, based on their predictions, we basically would be testing all-time highs, or should be testing all-time highs on the number as it came out. So lo and behold, we got this great CPI number. And what did the market do? It immediately traded higher. We ripped from basically 602 spot 70 to an immediate high of 606 spot 40. So we ripped up like $4 or so all in the first 5 minute candle from that low to high. And at that time, well, really within 5 minutes or so after, like 8:35, 8:40, I was typing into the VTF and I was saying, "Hey, this is interesting. We should be even higher than we are. It's interesting that we paused where we are. Based on my quick math, we should have been up to like 610 on that number. So we only went up to 606 and change. And then, we rested for 5 minutes. We looked like we were going after highs, but then we didn't immediately go after highs. So by this 840 bar, I was like, this is interesting. We should be significantly higher. And I kind of posited one of two things that could happen here. One was that, if anyone remembers, the non-farm payrolls number when it came out on Friday, also on the immediate upside reaction, same deal. It did not get us as high as we air quotes should have gone on that number. See if I can still see that in the chart here from last Friday. Thursday, Friday. Here it is, Friday. So immediately we ripped up to 598. And I kind of had a similar thought process. I was like, we're at 598. That's interesting because we should be at 600. Again, just based on the sell side analyst information that I had been reading on whatever the non-farm payrolls number came out versus expectations, my math had us at 600. But the immediate reaction didn't even quite get us up to 598. So I was like, that's interesting. Does it mean something? Because when the market doesn't do what it should do on good news or bad news, sometimes it could be a signal for the opposite side. But then lo and behold, within like 10 minutes of the market opening, we were surpassing that SPY 600. And I was like, okay, there we go. We kind of got the expected move. So this morning, I'm looking at this and I'm asking myself the exact same question. I'm like, all right, we really should be at SPY 610 off that number. It came out so light. We ripped to 606.50. We're pausing. Is this just going to be a matter of the market needs time? It's going to make a higher low and continue its uptrend up to 610. Maybe, similar to the non-farm payrolls number, there's a little bit of a delay. The market opens, we rip higher, we just keep going and going and going to the upside like we've seen in the past. We get to 608, then we get to maybe 6010, 609, 610, 610. There is no 6010. Why do I keep saying that? 610. So that's kind of, what I was thinking, but also in the back of my head, I'm like, this is another interesting reaction because we should be higher and we're not. Does it potentially mean something for the other side? Every day is a long day. And that was the question. And I didn't know. And basically, when I was doing the morning meeting, I was like, look, the market isn't really trading right on this. We've pulled back more than we should have. We still could make a higher low. We still could make a pivot here and go. But pay attention to that starting point. As we always say, every time we get one of these important economic numbers, pay attention to the starting point of the move. If we get below and hold below the starting point of the move, that then becomes your real signal that they sold this. And that is potentially very meaningful. It would be the first time in months, literally months, that we sell down on honestly anything, good news or bad news. But in this particular case, it'd be selling down on good news. And that would be a very different change. So that was what we needed to watch. Then the market opens, and immediately we trade down. I'm like, okay, wow, this is really interesting. And then on the 945 candle, we break the starting point low in all the indexes. And I was like, wow, are we really getting below that low? Does it mean something? And then, of course, it just becomes a downside tail. We start working our way up. We start looking extremely strong again. We're still not where we were, but how can you look at these technicals here ignore the 1105 candle. Prior to 1105, how can you look at these technicals on any time frame and say that anything is bearish? You're really reaching, but you could say what I'm saying, which is the market should be higher and it's not. That's literally you're grasping on straws. It's the only thing that you could potentially say is wrong with the picture of this market at 10:55 a.m. is that we should be higher than where we are. But the technicals are bull flagging. They're looking strong again. We broke the opening high. The daily chart technicals look great. Short-term tactical was in the red. But we don't have extreme extension off the ADMA. Everything looks great. And in the background, though, we had one other major factor that was potentially impacting the market today, which was the U.S. China negotiations that are ongoing in London. And we got some Scott Besson commentary that came out at 11:05 that hit us down. So the China US thing is interesting. I mean, it's been interesting. This market has been so incredibly strong. Um, we have not. So I, I think everyone knows what's going on with the trade relationship with China. I'm not going to overly recap this, right? But a month or two ago at this point, we agreed in Geneva with China to do a pause, basically, on the 145% tariffs that we were at, or something like that. And the market loved that pause. So the pause was agreed to over the weekend here between May 9th and May 12th. We got a huge move higher on the pause. Then somewhere, I think it was on May 30th, we got headlines out from both China and the United States that said, hey, China accused the United States and the United States accused China of not following through with the agreement that was made in Geneva that created the pause. But the market didn't go down on that, right? And I think that that's key. The market did not go down on the deterioration of the relationship, the deterioration of the agreement that caused, and this is one of the things that I was flabbergasted about with how strong this market is. We went from 565 to a squeeze up to 595. We went up $30 basically, and something like almost 20 of that was all via one gap, one day. So we went up $20 in one day. We went up $30 overall on a big market squeeze higher on the China pause in Geneva. And then we got the headlines out on the 30th that no one's following through with what they agreed to on both sides at that conference in Geneva, but we didn't tick down on it. And that was one of the couple points a couple weeks ago, over the course of the last 2 weeks, really, that I found to be mind blowing, which is that, look, I get it. Good news, we go higher, but bad news, we're not ticking down at all. And then we had weak economic numbers that were hitting on those ISM manufacturing and services and things like that, and nothing could bring us down. And most importantly, the China thing didn't bring us down either. And then my thought process, I guess, was leaning towards like, all right, the market is just getting bored and tired of all the trade war headlines. Um, they just want to see if this tariff stuff is going to be so bad. They want to see it show in the economic data, and we haven't really seen it in the hard economic data. The most important thing really being those non-farm payrolls and like CPI, PPI, PCE. Those really being the important inflation numbers and the jobs numbers. That's really what's key at this point. But it was incredible that we didn't go down on that. Yet then recently we started moving higher, not in a huge way, but moving higher that we were going to have a meeting with China in London. And I'm scratching my head on that. I'm like, how are we moving higher on that headline when we didn't move lower on the deterioration headline? Like it'd be one thing if we had the deterioration headline back here on May 30th, and it caused us to sell down from 590 to 580, let's just say. And now we're trading down to 580 because the relationship with China is deteriorating. And then we get a headline that we're going to have a meeting with them in London, and then we go all the way back up to 590. That would make sense. But the fact that we never downticked at all, we literally downticked for 15 minutes and then be bottomed on that day, uh, why would we then move higher on an improvement in the relationship. And then all that came from this entire meeting in London is we just went back to exactly where we were after Geneva. That's all that happened. When you parse through, what's going on, we agreed to let Chinese students start coming back to schools in the United States. We agreed to kind of keep tariffs at 55%. We agreed to, get some rare earth materials. That was only the exact same stuff that we agreed to back on the 12th. It was just by the 30th we said, hey, no one's following through with this. And now after the meetings today, Scott Besson comes out and he's like, yeah, we basically agreed to do what we agreed to do back here on May 12th in Geneva. So there's like nothing new from this at all. There was no real improvement in trade that came from this. Apparently, China said, we're going to keep on sending over our fentanyl. I don't think that's exactly what they said, but that's you know what kind of came out in the report today. They're going to keep on sending over the fentanyl, and we'll give you some rare earths with it, so you can have some rare earths with your fentanyl, and maybe you guys can give us some semiconductors. But basically, we're exactly where we were. There is nothing at all new on that. I don't know if the market was hoping that the tariffs would get reduced further, but they didn't. We're exactly where we were. And by the way, there's still some pretty nasty numbers on the May shipping that's coming over from China. But you're still not seeing any of this in the economic data. When you read a lot of the sell side analyst notes from Bank of America, JP Morgan, Goldman, they're kind of all saying the same thing, which is what we also have been talking about, where any economic hit that's going to be coming from the trade war and the tariffs, it's not, you're not seeing it yet. You're not seeing it from May numbers as they get reported in June. We knew that. You might it's going to be more of a process. And the only thing that I can somewhat liken this to, it's obviously a very different situation, but the only thing I can somewhat liken this to is COVID. When it came to COVID, we know that shipping entirely stopped. So the shipping that's coming from China is as low as it's been basically since COVID. So when I think about the COVID situation, obviously that was very sudden. It was a very different type of an event, and it was so much worse. I mean, people weren't even supposed to leave their houses and all that stuff. But when you think about like the effect of COVID on inflation, it took like a year, I feel like, before you really started to see the inflation numbers begin to move higher. And again, I'm not really comparing apples to apples, because there was so many differences with the COVID situation, especially when it comes to inflation. You had the Fed dramatically cutting, you had the federal government sending everybody checks. At the same time, we had all these crazy supply chain disruptions. This environment is different. The Fed is not cutting. The government is not sending out checks, though maybe you could argue they're going to be doing that in some form or another if they get the big beautiful bill passed. Uh, but we do at least have some degree of the supply chain disruption that's the same. So, all the analyst notes I'm reading are really like, it's going to be deeper in the summer before you actually see the impact of any of that on the market. But the bottom line is, circling back to today's price action, we're looking big and beautiful with the stock market. That's what we're looking big and beautiful with. And then Scott Besson comes out, and we immediately saw the no headway with China on tariffs. And for what it's worth, that blows my mind. I feel like that's the easiest one to get through. Like, I don't even think that you can track it, really. I think all that China has to do is be like, yeah, we'll help you out. The whole thing is that they don't want to, someone in the VTF said it perfectly. Um, they don't want to agree to stop sending fentanyl because they refuse to admit that that's where the fentanyl is even coming from. And if they agree to stop sending fentanyl, it's an admission that the fentanyl is coming from them to actually begin with. Regardless, though, I feel like there would be simple ways to be able to get around that without actually agreeing that the fentanyl is coming from them to begin with. They could say, hey, we're happy to help with, I don't know, troops or some sort of border control or something like that to ensure that fentanyl doesn't get into the United States. We're willing to help you out with that. I think it could be the easiest thing ever. And then tariffs get reduced, and then the market would move higher. I think there's still a 20% premium on those tariffs is coming from fentanyl. But regardless, while I think that that is low hanging fruit to be reduced, and I'm expecting that to come off at a certain point and for the market to potentially move higher on that, I was actually surprised they made no headway on that at all. So, market really ticked lower on the commentary from Scott Bessent. And it kind of changed the mood a little bit. We rolled down, and then once again, we lost the starting point. The starting point was 602 spot 68. We lost to 602.68 here by a little bit. We broke new lows. The never ending bid, there is some degree, if you read that Charlie McElligott note, of what he describes as synthetic positive gamma on the downside that is creating a dip that gets bought. We know that there's actual positive gamma as well. Last I saw it was $1.7 billion worth. So into a 1% down S&P move, you run into $1.7 billion worth of buying from the Gamma crew. But there's also one of the really interesting things that we're talking about a bit in the VTF today that came from Charlie McElligott's recent note is he's discussing how all of this uncertainty for U.S. corporations based off the tariffs is making it so that they don't want to spend money on things like R&D or employment potentially or whatever, new hiring. So that uncertainty is making them not spend money in other places, and they're just buying back extra stock with it. So stock buybacks are through the roof right now. And according to the note, you notice the buybacks pick up, they buy even more into any downticks. So that acts as like a synthetic, he calls it synthetic positive gamma. But basically what that is just it's buying into any down move, it's buying into any dip. And the corporate buyback numbers have been huge. So once again, pullback, breaking the 830 low, breaking the opening low, just leading to a huge snapback. And then finally out of nowhere, we actually really sold down at 2 o'clock today. I have nothing to attribute this to outside of just technicals, outside of just the fact that I would argue that the market wasn't trading right all day to actually begin with. So, um, the market wasn't trading right all day to begin with, and then we sold down, and it wasn't a major sell-off. It didn't feel like a major sell-off. Didn't feel like the world was crashing. SPYs closed down 0.25%. So, circling back to what we were saying in the beginning of the morning meeting, does today matter? When you look at the daily chart and analyze the technicals, today does not matter at all. The trend is intact. We're not even to the ADMA on the daily. We've broken no support levels, but maybe the market environment is starting to change, where maybe we're not moving higher on good news in the way that we had previously. It doesn't necessarily mean that we're ready to break down or sell off on bad news, but the only difference I would note today that is different from anything we've seen for over a month is that we did not trade up appropriately as much as we should have on good news. And it's to be determined on whether or not that actually means anything more. This is not a day to take notice of. It's not a negative Maribozu. It's not a negative engulfing candle. We didn't break back below any support levels or previous resistance levels. There's no upside shooting star. There's no upside tail. There is literally nothing in these technicals that is problematic. The only thing is that we should have been significantly higher today, and we weren't. And we'll see if that turns into anything, especially as next week, we'll see what happens. Next week we have like the quad witching OPEX a week from Friday. And starting on Monday of next week is when the corporate buyback blackout window actually begins. So we'll lose a bit of that part of the systematic bid. With that said, McElligott's notes that the vol control buying actually might start stepping in again soon. So it might be as soon as we're losing the corporate buybacks that vol control steps back in. And that circles back to something I've been talking about as a theme for the market ever since April 21st, which I find to be so interesting. is, markets work in feedback cycles. Buying leads to more buying, selling leads to more selling. That's literally how markets work. The interesting thing about this current uptrend that we've been in is that, while we've done a fantastic job in the past of analyzing market dynamics to understand, where the risk becomes to the downside, where the risk becomes to the upside, we've used market dynamics to identify some major tops and bottoms for the market over the course of the last few years. I don't really remember an evolution of us watching a trend where we knew pretty much every step of the way where the buying was actually coming from. It started with the systematics. It was like CTAs and vol control, like the trend following algorithm and the vol control algorithms just passing the baton back and forth for the first leg of the market. Eventually that led to a hedge fund forced buy-in. That was like this next kind of leg higher. Then we had some digestion. Then as we broke higher, this latest move up has been actually more of a short squeeze rally. For 6, 7, maybe 8 days in a row now, we have had uh, it's another like record that's being set. Non-profitable tech massively outperforming Mag 7. So it's really and that's based on hedge fund gross leverage uh, versus net leverage, or gross exposure versus net exposure. And that's something we've also spoken about recently in these meetings. We started seeing that at the end of last week. And throughout the entirety of this, there's been two very consistent buyers. One has been retail, and the other has been corporate buybacks. So we've known every leg of the way up on who's been buying. And the question is, when does that end? When does that position get extreme enough that there's no one left to buy? We're not there. We were there, and that's what had us become so bearish back in February. It was a combination of there being no one left to buy, plus OpEx, plus a catalyst all hitting at once that enabled this selling to really take place. And now, we're in this environment where it's still just like one buyer handing the baton to the next buyer, but we're going to lose the corporate buybacks soon. Seems like we'll never seem to lose retail unless we see unemployment move higher. That's why, by the way, the unemployment numbers are so important right now, because the retail bid has been massive. They're buying dips, they're buying highs, they're buying everything. You only will really begin to lose that retail bid if you begin to see unemployment increase and layoffs increase. And uh, that's why I think that the market's very sensitive right now to these employment numbers. The weekly unemployment claims number. I've been paying attention every time in the VTF we're seeing any layoff announcements coming from any company, and it seems like we're seeing a lot of them. But sometimes we're very insulated with our information with public companies, and that's not necessarily enough information. But we'll see what happens. Just really interesting that we didn't continue higher. And also the IWM should have been the outperformer on this number today. The IWM and the short squeeze names, and some of the short squeeze names still squeeze today. But we really should have been able to break up even higher, and we didn't. And interesting to see that we failed at the 200 day on the IWM. So it's pretty much all I got. I'm just going to leave it on the macro stuff for today, and I'm not going to dive into any individual stocks on my own. Of course, if anybody has any questions on any of them, I will be, more than happy to take a look at any individual names that anybody wants me to look at. But yeah, we got Oracle trading up after hours, so that helps the market. Yeah, that's all I got. What do you guys got? So we got some headlines coming out as I was talking. So Scott Bessent, Trump administration is committed to keeping the dollar's currency reserve status. Said stablecoin legislation backed by U.S. Treasuries will expand dollar usage. No quid pro quo in terms of chips for rare earths in the U.S.-China trade agreement. That's interesting. So what did we give China at all? Nothing? I mean, we just kind of agreed to where we were, I guess. All right. Shooting star on the futures due to the daily chart, including the CPI for what it's worth from Tate. All right, good information. Sherry just giving us our VIX dates. So June 18th, we have FOMC plus VIX expiration. June 20th, we have OPEX. And June 30th, we have quarterly OPEX. June 30th, we have quarterly OPEX? Um, bearish engulfing on the IWN daily from a technical standpoint. Yeah, I would still like that candle to be bigger, even more wide ranging, to at least encompass like the full totality of two or three of these up candles. But it's a start. We'll see if we get any continuation tomorrow. All right. Let me hop over to the YouTube, which I haven't logged into yet. See if there's any questions in there. Um, Cyril just saying that selling the good CPI today was notable. Cool. It certainly was. All right. What else, guys? Anything else? Otherwise, I got my first haircut appointment of 2025 scheduled for today, so I'm gonna go get a haircut. Yeah, you heard it right. I'm very loyal to my New York barber, so I don't get a haircut in Idaho. I get it when I am in New York, and I have been back in New York since Sunday, and I'm getting a haircut today. My hair is getting a little crazy. Honestly, I just want to grow my hair out all the way out like I did in COVID, but I don't know if that's would be very professional of me. Um, my hair was like almost down to my shoulders during COVID. I went for like a couple years without getting a haircut during the entirety of that process. From Ben, seemed like a lot of selling pressure on Nvidia, but why would it be going up after hours? It could be moving as a secondary to Oracle. It's not up that much after hours. It's up 40 cents. And the NASDAQ. Oh, interesting that the NASDAQ's not really up. I would expect the NASDAQ to be up a little bit more on Oracle. I don't know. 40 cents in NVIDIA after hours isn't enough to really make a big claim. I would say that the stock is moving big after hours. Doesn't that could just be the normal volatility of how the stock moves. 20 cents is nothing for the name. Haircut and a New York slice of pizza. I've already hit, and I've already got some pizza. I already got Chipotle, which I was a little disappointed with. I got to try it again. I hit Shake Shack one time. Went to my favorite local deli for a real hero today. You can't get a good hero outside of New York, or at least not out west. These people don't even know what a good sandwich is. It's kind of sad. Somebody's got to open up like a real New York sandwich shop out west. It would crush it. It would absolutely crush it. So that was today's lunch. All right. Have a great night, everybody. I'll see you all tomorrow. If you're on YouTube, you know what to do.